Hey everyone, welcome back to the channel where we break down stocks with real data and straight talk. Today we're diving deep into Aehr Test Systems, ticker AEHR, a company that's been making waves in the semiconductor test space. Over the past year, this name has delivered more than 500% gains, yet the latest quarter shows both explosive backlog growth and a clear earnings reset that investors need to understand. Aehr Test Systems, founded back in 1977 and based in Fremont, California, specializes in advanced burn-in and test systems for integrated circuits. The company serves makers of silicon carbide, gallium nitride, and silicon photonics devices that power electric vehicles, data centers, and AI infrastructure. With just 136 employees and a market cap around $2 billion, it's a nimble player in a high-growth niche. Looking at revenue segmentation, fiscal 2024 broke down into systems at roughly $24 million, contactors at $38 million, and services near $4.5 million. Geographically, Asia accounted for over $58 million of the $66 million total, showing heavy concentration in that region, while the US and Europe contributed far less. On the earnings front, the company just reported fiscal Q4 results that beat estimates on both top and bottom lines, with 11 cents per share versus the 1 cent loss consensus. Full-year revenue came in at $50 million, down from $59 million the prior year, and the company posted a net loss of $7 million or 23 cents per share. Backlog entering fiscal 2027 sits at record levels, and management expects revenue to more than double on accelerating AI-related demand. During the earnings call, leadership highlighted new orders tied to artificial intelligence processors and silicon photonics, emphasized the reusable contactor technology that lowers customer costs, and pointed to a pipeline that could support sustained growth as the semiconductor market heads toward a $1 trillion opportunity by 2030. They also noted pressure on high-margin consumables, but expressed confidence that system sales and new design wins will more than offset that. From the balance sheet, cash and equivalents jumped to $116 million after a sizable equity raise, giving the company a very strong current ratio above 10. Total assets reached $247 million with minimal debt, while stockholders' equity sits at $220 million. Operating cash flow turned negative again this year at $3.3 million, reflecting the investment phase the business is in. For valuation, we turn to the MarketSnap model that uses a price-to-sales approach given the hypergrowth profile. The setup carries high model confidence because the revenue fade assumptions align well with the company's stage and the available forward estimates. Current price sits around $95, while the model puts fair value somewhere in the mid-20s range. That gap reflects the market pricing in much faster sustained growth than the conservative fade scenario assumes. Key drivers include the 8x sales multiple applied to normalized revenue, the projection of 23% growth tapering to 2.5%, and the custom free cash flow bridge that ramps from 0 to 35% of net income over 5 years. Remember that small changes in those growth or discount inputs can move the fair value estimate a lot, so feel free to run your own assumptions on the intrinsic value calculator at MarketSnap.com. Strengths include deep positioning in silicon carbide and silicon photonics test markets, plus a capital-light model with strong gross margins when volumes ramp. Weaknesses center on customer concentration and a history of volatile profitability. Opportunities lie in the AI data center build-out and electric vehicle power electronics expansion. Threats involve cyclical semiconductor downturns and execution risk on scaling production to meet the record backlog. Recent performance shows a 1-week gain of 20%, but a 1-month drop of 24% after the post-earnings rally cooled. Over 3 months, the stock is up nearly 20%, 6 months up 230%, and the 1-year return exceeds 500%, dramatically outpacing the broader semiconductor industry. My take is that AEHR sits at an interesting inflection where the AI tailwinds are real and the backlog is impressive, yet the valuation already prices in a near-perfect outcome. The gap between the model fair value around $25 and the current $95 price leaves little margin of safety if growth slips even modestly. I'd watch how the new capacity comes online and whether design wins convert to sustained revenue before getting aggressive here. All in all, Aehr Test Systems is a high-conviction story in the semiconductor test space with genuine long-term potential, but the current price demands flawless execution. Thanks for watching. Like and subscribe for more deep dives, and I'll see you in the next one.